I'll go through charts of two of the poster child children of 2x, 3x ETFs. Everybody loves these things, right? But then they buy and hold for a year. Please don't do that. Please do not buy 2x, 3x ETF and hold for long periods of time. You are going to get whacked. The reason for that is the 2x, 3x ETF do not own the underlying shares. For example, on Tesla or MSTR, those are the two prominent ones that I can show that you guys will clearly understand once I'm done with it. You guys will clearly understand why buying and holding 2x ETFs, 3x ETFs is dangerous for your pocket and your mental health, obviously. Now, you can obviously sell calls, but then you can do that with the underlying. Why? I mean, the numbers are mind-numbing how these 2x, 3x ETF bullish ones, right, melt. You know, they are for short-term trading purposes. Like if you catch a trend in a stock for maybe a week or two or three, that's fine. Buying a 2x, 3x ETF and holding is fine. But if you are buying this thing and holding for long periods of time, especially if you're doing ones, most of them have options, luckily, so you can actually lessen the pain with options, with selling options on it. But a lot of folks don't understand it and they buy and hold it. You can't buy and hold a 2x, 3x ETF because not only they don't hold the underlying, they own swaps and they own options, just like leaps and long-term options in there, or maybe quarterly options. And what happens is that every time they roll, they have to roll those options and swaps. And if the underlying is going down, next time they roll, the premium they pay may be a lot higher, and then that premium just keeps melting. And that's called slippage. Slippage is really, really something you all must understand. A lot of people don't understand that. Digital asset treasury companies, and most folks don't even have a clue about 2x, 3x ETFs. And now there's talk that 5x ETFs are going to come around because people love these products. I get it. There's a time and space for all these things. But if you buy TSLL because you like Tesla, or if you bought MSTU because you liked MSTR, you are demolished. Literally, you're demolished. Okay? So buyer beware, as usual, as I always say. And once you understand the mechanics of how these things work, and they all have their own websites, by the way, they all have the net asset value. Go check it out. Go to TSLL's website and see what's in that 2x ETF of Tesla. Go to MSTU's website. Go check out what's in there. I guarantee you there's not a share of MSTR or there's not a common share of Tesla in those 2x ETFs. And the 3x ETFs are going to have more slippage. Yes, they're going to reward you on the upside if you do catch a leg up, but they're going to also kill you on the way down. And the 5x ETFs obviously are going to have more slippage because leverage is an okay thing. I don't mind leverage, but what I do mind is people not understanding what they're buying, what they're getting into. And then I don't want people to lose money. I mean, if I can stop you from losing money, I think I did my job. Forget about you following me and you follow my trades and make money. That's not the point. The point is, first you have to learn the risks. A lot of folks on X, a lot of folks on YouTube don't talk about risk. Look, there is risk getting in your car and driving to the supermarket. Okay, there is risk in everything. There is risk in waking up the next morning. So I have understood risk long time ago while I was on the desk trading. Risk is something that most people ignore. What they do is they hope and pray that something will happen. Like this rally that we just started 15 minutes ago before I came online, Bitcoin and Ethereum are pumping. Who's to say they're not going to end down negative? Nobody knows that. A lot of people have opinions. They're just opinions. They go, oh, Bitcoin's going to do this. Bitcoin's going to do that. Nobody knows. Market knows. Follow the price. The price takes precedence for me. Volume takes second. And if you follow those two just simple rules, you will understand it. But when you're structuring a trade or when you're buying something, understand why you're buying. What is it that you're buying? Is it 2x ETF, 3x ETF? Is it going to follow the stock on the way up? Yes. For a short period of time. Is it going to follow it on the way down? Yes. But then every time they have to roll the swaps and options, there's slippage. You're going to lose. So buying and holding these, in fact, disclaimers on their website said these are short-term trading vehicles. These are day-to-day trading vehicles. These are not buy and hold vehicles. There is a disclaimer in there. But most people ignore all the disclaimers, and then they lose their ass, and then they go, Serge, what happened? I'm like, I told you what they are. Why did you buy it? Right? I mean, you know the risk. You can't just close your eyes and say, oh, well, I like it because I want to make 3x the money on the way up. I'm like, wonderful. But I'll show the charts and I'll prove it to you guys. Yeah, so my point in all of this is buyer beware.